Hi, this is Joe Rabil with Invest Like a Pro. Going to spend a little time talking about Marathon Petroleum. I've got a monthly chart on the left and a weekly chart on the right. What I want to talk about today is the fact that I spent a lot of time talking about MACD. I have certain signals that I like a lot that I've written in my book, Invest Like a Pro. I've done videos on MACD as well. I've mentioned, and I have a specific plan in the book called the MACD pinch play, a 2-time-frame pinch play. And I like to keep coming back to this. There's so many different things and aspects about it that I think are very, very helpful. But today I wanted to focus mostly on the fact that price needs to be in place before you really want to use that signal. In other words, just using the signal by itself, and I mentioned this in the book, that you don't want to just take the signals by themselves, just looking at MACD. You're going to put yourself in a lot of trades that I think are marginal. But if you use it in conjunction with the price action and the 1, 2, 3 change in trend, and then look for the signal to kick in, I think in a lot of cases you're really going to find that you're gonna really increase your win ratio. So again, I've got a monthly chart on the left and a weekly on the right. Always start with the higher time frame. So for now, I'm actually going to scroll back because I just want to show you. You got a stock that's moving up on the higher time frame. This good trend, higher highs and higher lows. MACD is confirming. I'm going to go bar by bar. We get a pretty decent spike high. I could have a trend line in place here, or I could have a much more aggressive one using this type of a scenario, connecting those bottoms, because that is a legitimate higher low there. So I could have that trend line in place as well. I'm scrolling along. And if you notice, now we get basically the first negative following the big topping tail reversal bar. You get your first real negative based on price action, price structure, change in trend type action. You haven't broken the 18-month yet, but you're breaking your acceleration trend line. MACD has turned down, but it hasn't broken through its signal line. Next bar breaks the 18-month line, so that's kind of strike 2, and the MACD crosses down through its signal line. Now we've got a couple more strikes against us. We started out with everything being positive, and now we're starting to shift. We've got a few things shifting over to the negative side. Now we've come down to the 18-month line, the 40-month line, and trying to hold this support at 60. That was where it broke out from. Tries to stage a rally. And if you notice, you get some sideways consolidation. You're caught in the zone between the 18 and the 40, and then you get more negative price action. Now you clearly didn't hold support. You clearly broke the 40-month moving average, and you've got a pretty strong separation to the downside of the MACD versus its signal line. So these are the types of things you want to be looking at bar by bar, whether it's a daily chart, an hourly chart, weekly, or a monthly like this. Every time a bar goes by and completes, you want to evaluate where you are in the trend and how strong it is. And each piece of evidence, each piece of data will help you move along in the process. So now we know we've done a lot of damage. We broke the uptrend. We broke the 18-month. We broke the 40-month. Okay, we really haven't had the 1, 2, 3 change in trend type of a pattern yet because, I want to see a better rally than this tiny little bar like that. The 18-month is starting to roll over for the first time. So we keep working here, and we finally get a decent rally going off the 0 line on the MACD. Now, notice what happens. You make a higher low and a second higher low, and this line is still declining, and this one's trying to rise. So because it's a monthly chart, now I've made 1 higher low, 2 higher lows, 3 higher lows, and I'm running into a declining 18-month line, and I've created a couple of tails on the candlestick chart showing that this line is acting as resistance right now. So I want to be looking now. I know that I've built up resistance here. I know I'm forming what could be a pinch play to the downside. One of the things I want to mention, though, I'm not a huge fan most of the time of looking for pinch plays to the downside when you're still sitting right at the zero line. I would much prefer the higher probability pinch plays are going to be the crosses down below, and then you get a pinch play develop right underneath the zero line, as opposed to right at it or right above it. Just want to mention that. But when it comes to the monthly chart, and if I'm going to go down and make sure that I'm getting a good trigger point on the weekly chart, I can still take this trade. So I'm just going to point out where this is on the weekly chart. If we wanted to look at both time frames together, I've got that on the right. So this rally up is this rally on the weekly. Okay. And again, what we're noticing is the MACD line and its signal line are making a move to the upside, just as you would suspect when you're getting an opposing trend going, meaning the trend is starting to roll on the monthly time frame, or it looks like it could be rolling on the monthly time frame. So I'm looking to see if I have a short setup developing on the weekly, and I do have the pinch play developed. It does qualify as a pinch play on the monthly chart. Now, one of the things I want to mention is I know I've broken the trend line, and even if I use the longer term, more important trend line, I've broken that one. Now I've gone up and I'm testing. So this is the break to the downside. This is a test. You're coming up about a 50% retracement. So I now have completed two pieces of a 1, 2, 3 change in trend on a monthly chart. So now I want to go down to the weekly chart, and I'm going to sit here. And in fact, I'll go back on this one as well. So you make a move up to the upside, you pull back. Nothing's really happening here that has me all that intrigued yet. I really need probably a little bit more of a sign that price action is some kind of a convincing movement on price. If I'm going to do it based on price alone, I really don't know that I've seen anything yet. We came in the zone and out of the zone on the 1480. The 1840 moving averages, but I don't have the price structure 1, 2, 3 set up really. I haven't had a trend line form, and this is where you have to adapt sometimes, and that's why you want to have in your arsenal a number of different patterns. So now what I'm noticing is as I go through bar by bar, I know again I've got a setup developed on the monthly chart, a pinch play. I am now potentially developing a pinch play on the weekly chart because I've crossed down. This time it's happening below the zero line. Both MACD and its signal line have crossed down below zero. I've got a single bar rally, and now I've got a second bar rally. Now, notice what we have right now. We have a stock that's sitting below an 18-month line, and we have a stock that's sitting below an 18-week line. Both are below their MACDs are both pointing down, and both are below their signal line. This is the 2 time frame pinch play. Now, would I prefer to have had a higher low in here, so it had a trend line break? So this would be the 2. So you'd have a 1, 2, 3. A break of the trend line on the monthly and a rally up, and have a 2 here. And then have a break of the trend line and then a rally up and have a 2 here? Yes, I would. But again, as I've said numerous times, it's just not a perfect world. And you have to kind of take things and look at where you are and say, okay, if I take this trade, will it be enough for me will I be able to make enough money if this stock comes down to this zone here? Because it might not be the start of a major trend based on the monthly, because, we could be turning at the zero line. I mean, there's some things that are going on, but I think there's a pretty high probability we're going to come into the 45-50 zone. So if I have enough based on the risk or reward to take this trade, I'm going to take it taking out the low of this bar. So I would be putting in a sell stop below that bar. If it's taken out, I'll put a stop in right above the 18 and this bar, the high of this bar, right there. And then my target area is going to be somewhere in the 45 to 50 zone. If you want to play for 2 to 1, figure out those numbers. If you want to play for 3-1, figure out those numbers and see which area makes the most sense to you. I think, when I have a 2-time-frame pinch play, I usually like to go for 3-1. So I'm going to go bar by bar here, see if, okay, so this actually triggers and you get a monster bar. I mean, it's very possible you could have been triggered into this, had a stop in place, and you would have been filled on your target all in the same bar. I mean, it all happened in 1 week. And the violence of the decline obviously saw a lot of follow through from there. And let me just double check this. There was no, the trigger point happened on a gap, but you would have been filled taking out that low. So it's not the type of situation where the gap opened at 50. I mean, the gap would have given you an entry right where that line was, right below the low of the weekly bar. And it would have been an excellent trigger to take you in and given you, because the weekly bar was not very big, you didn't have to go down to a 3rd time frame. You gave you the ability using the 2-time frame pinch to put the trade on and have the risk reward that was necessary to go and make some money. So hope this is helpful. Please hit the subscribe button and the like button, and I'll talk to you soon.